Welcome back. You're watching The Money Show and time to get your mutual fund portfolio queries answered. And for that, I have with me Nisreen Mamaji, CFP, MoneyWorks Financial Services. Nisreen, good evening and welcome to the show. And let's begin. I have Girdhar's query via email from Bangalore. He says that he's invested 15 lakhs in a time deposit in post office and it will be maturing next month, and he wants to shift this amount in mutual funds, and he wants to understand the kind of mutual funds that he can rely on, and high returns in long term is what his condition is, and he wants to know the kind of fund mix he can have. Nisreen.
Sure. So congratulations, Giridhar, on taking the right decision to invest in mutual funds, and you're moved from time deposits. So that's a big step. From a fixed income point of view, and now you're going into equities. So we are going to suggest to you certain funds for at least a 10 to 15-year horizon, which will give you, a very good wealth creation package and create alpha, because it's, any equity investment is inflation linked. So if you notice on your time deposits, the real return over inflation will be very low, maybe like 1.5 to 2%. But when you're considering investing in equities, you are participating in risk, and therefore the alpha over the inflation would be slightly higher over the longer term. In the shorter term, you might face volatility, but in the longer term, definitely the volatility will be ironed out, and you can expect considerable alpha over inflation. So the asset allocation mix that has been recommended for you is Motilal Oswal large and mid cap, 5 lakh rupees. Franklin India Flexi Cap, 5 lakh rupees, Sundaram Small Cap, 2 lakh 50,000 rupees, and Nippon India Consumption Fund, 2 lakh 50,000 rupees. So the Sundaram and the Nippon India Consumption have been included. Consumption theme in the next 10 to 15 years will be picking up, because all of us are aspiring and are purchasing more, whether it is consumer durables, whether it is FMCG, whether it is luxury items. So our consumption is going up. Therefore, we thought that you should participate in the growth story of consumption via a mutual fund, because you are buying these products, and so you can also be investing in a product that will be earning from the consumption theme. The small cap theme has been recommended because for at least 10 to 15 years, some of these small caps will be doing a price discovery and will become a large cap, and you can participate in that progress. A flexi cap fund would be typically, a large and mid orientation. The fund manager's discretion to invest in large, mid, or small, depending on the economy and the market, scenario. And Motilal Oswal large and mid, which would be a combination of large and mid. So we've tried to cover all the possible options for you to give you a well-rounded portfolio. In about 10 years' time, if you're investing 15 lakh rupees today, and if you achieve a compounded annualized growth rate of about 14%, you will have about 55 lakhs in your account. So that would be the corpus that you would be looking at in about 10 years' time.
All right. Sure. So, Girdhar, MFSL large and mid cap, Franklin India small cap, Sundaram small cap, and Nippon India consumption. And with that, welcome to equity markets. Let's move on. Let's take Kishore's question from Chennai. He says that he's 42 years old and he has 10 lakh that he wants to invest in lump sum in an equity fund. And he also wants to know if this is the right time to put money. And if not, he can opt for a fixed deposit as well. And he has a fixed income coming through from fixed deposit also, which is almost 30 lakhs from all of his FDs, it seems. And his mutual fund investment currently includes 2.5 lakh in Quant ELSS fund, and he has a medical insurance, term insurance coverage already. The target is to accumulate 1 CR through mutual funds in 10 years, and he's also ready to add more SIPs if needed. He's self-employed and prefers lump sum investments from time to time, considering investing in Quant Value Fund and Quant Large and Mid Cap Fund. He wants to know if these are the good or the right choices for him.
Sure. So if I've understood correctly, Kishore, you already have a fixed income coming in from the fixed deposits. You are self-employed and you have an investable surplus of about 10 lakh rupees. And your question is how you should be deploying that. So our suggestion is that you can invest through the STP route, because since the market has already run up to a large extent, you can invest a smaller amount for the next 10 weeks. So the entire investment will move from debt into equity over 10 weeks. So therefore, if there are any corrections during this period, considering the budget, and various other factors that would be having a play on the NAVs of the mutual funds, of the equity mutual funds. So you should do an STP over the next 10 weeks. So the recommendations are that you can invest Mahindra Manulife Ultra Short Term Fund. That is your source fund, and it will be targeting the Mahindra Manulife Multi Cap Fund to the extent of 5 lakh rupees. Quant Money Market Fund, and your target fund is a large and mid cap fund, also what you have recommended for 2,50,000 rupees. ICICI Pru Short Term Fund, Ultra Short Term Fund, going into the ICICI Pru Business Cycle Fund for the balance 250,000 rupees. So that is how you should be investing the 10 lakh rupees, 50,000 per week per fund for the next 10 weeks. Now your query is that you already have the Quant ELSS fund. So that would also be included in your corpus that you're looking at for about 1 CR. So the future value of this particular investment right now, if you compound it at about 40%,
Right,
compounded
Nisreen.
at, yes, if you're compounding this
Okay.
at about 46, it would be amounting to about 46 lakh rupees after 10
Sure.
years. And so
Sure.
your future goal is about 1 crore. So you're running short of, at least 53.5 lakhs. For that, you can do an SIP
So,
of 38,500
so you need
rupees.
to, exactly, so you need to increase your SIP amount, and I think
Sure.
rest of the things that you've recommended are flashing on the screen as well, which he can note down. But it's time up on the show today, Nisreen. Thank you so much for taking time out and helping our viewers with their financial portfolio queries. And I'm going to leave our viewers with our WhatsApp number and email ID, because the only show where you can get your life financial planning done is the Money Show. So do not forget to send across your questions on our WhatsApp number and email ID. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.